This is not a growth stock, and it's certainly not an AI darling, but it comes with a strong dividend track record, supported by robust operating cash flow, and today it offers a dividend yield of around 6.4%. Despite its fundamentals, the stock has gone nowhere for years. Is this an opportunity or a trap? Let's break it down. OMV is an Austrian energy group headquartered in Vienna, operating across the entire value chain, from oil and gas production to refining, fuel retail, chemicals, and increasingly renewables. Through its stakes in Borealis and Borouge, OMV is positioning itself as a major global player in plastics and chemical solutions, with a planned merger set to create one of the world's largest plastics groups by 2026. OMV is also anchored by two powerful shareholders, Austria's state holding company and ADNOC from Abu Dhabi, together controlling more than half of the shares. Now let's talk dividends, because this is where OMV truly stands out. There's a progressive base dividend designed to be maintained or increased every year, and on top of that, a variable payout funded by operating cash flow and suspended if leverage gets too high. At today's prices, the base dividend alone delivers a yield of roughly 6.4%. That's before any potential variable payout. For income investors, that's a meaningful number. But this income doesn't come without uncertainty. OMV is in the middle of a deep transformation. Under its strategy 2030, around 40% of annual investments are being redirected into future-oriented areas: recycling, hydrogen, geothermal energy, sustainable fuels. This makes short-term earnings forecasts difficult. Management has been clear. Long-term resilience comes before short-term profit optimization. The market appears cautiously supportive. Since the strategy was announced, OMV shares have moved sideways to slightly higher, supported primarily by steady and attractive dividend payments. So what should investors realistically expect? The bottom line, OMV's Strategy 2030 is built around cash flow, balance sheet discipline, and shareholder returns. A central ambition is to lift earnings per share to roughly €9. If management delivers, dividend capacity would rise materially and the stock should re-rate over time. But investors should not take that outcome for granted. The target is ambitious, execution risk is high, and with OMV in the middle of a far-reaching transformation, success is anything but guaranteed.